All right, let me start the recording and then we can get started. Okay, so
And I just wanted to ask you.
Yes, your question?
Just like how you see these next 2.5 hours basically playing out. So run through a bit of the exam technique and then like jump into the past paper.
Well, I'm going to go through each question and explain concepts and do workings. And then if you have any questions, you can stop me at any time and you can tell me, okay, well, just elaborate more on this or elaborate more on that or something like that.
Okay, great.
So it's basically up to you. You did say you're struggling with the actual past paper, so I'm going to focus on those in terms of approach and technique.
Yeah, 100%. I think key would probably be like to get through past papers. Obviously, like we said, maybe I could show you like how I'm working it out, etc. See where we're going wrong, go through, do it, discuss it, etc. Like you said, a bit of exam technique and stuff like that.
Yeah, so ideally, I would have preferred if you had a look at the question beforehand. So we're not going to have enough time for me to give you time to do the actual question and check it. That I need you to do ahead of time. I'm just going to run through each question, discuss the workings, discuss the approach, and then show you how you should be answering these questions.
Oh, brilliant, 100%.
Okay, so tomorrow's session, because we've covered one today, you do have an opportunity to maybe go through any of the other past papers. Okay, the first thing, while we're on that topic,
I've actually gone through.
While we're on that topic, you've got all these past papers from the IMM graduate school. You should try go through them as an exam, as a practice exam. So don't look at the answers, go through each question, try attempt it the best that you can, then check the answers, see how you've done, and then review what you've done and see where the mistakes are. That's the important part.
100%. 100%. So I've gone through the past papers.
That's good.
As well as, there are like 1 or 2 questions that I wanted to see how to get to that answer, etc.
Yes, that's fine.
So and then we can just see from there.
Yeah, that's fine. Okay, so it's good that you've gone through them. At least then you've practiced working through the actual questions and answers. All right, so
100%. As well as I'll be up tomorrow morning early as well to also do some more past papers. And then one more question before you get going, which I'm excited to do. I actually always used an app as my financial calculator. I used to have an app as my financial calculator, and just happens to be that my app has gone down right now. Well, not right now, a few days ago. So I actually got myself a financial calculator. Have you used the financial calculator or?
Yes, I know how to use the Sharp, the Texas Instrument, the HP, the Casio. Those are 4 different variants that different institutions
so
describe.
It's just like when it gets to like one of those questions, just I wanted to make sure that I have got it correct on a calculator, because it's very different to the app actually.
Yeah, so the HP is used quite a lot by a lot of different institutions. It's the HP 2B Plus, right?
That's it.
That's good. Okay, yeah, we can discuss that when we get to questions look here at net present value.
That's brilliant.
All right. Okay, so let's get started then. We've got a lot of questions to cover. So this is obviously the semester 1 paper. I'm going to look at the first question. All right. So good exam technique is, as you look at each question, you first need to look at the required. So what does the required here ask us to calculate? Calculate the net present value of the proposed acquisition by making use of the templates below. Okay, so obviously in this particular question, they've given you something to work with. Okay, the focus here is net present value. Right, so net present value speaks to time value of money, where you're discounting future cash flows back in time. Right, so then you have to go to the question, okay, and then you've got to read the question. You've got to highlight things that are important as part of the actual NPV calculation. All right, so you read the question, okay, and then let's highlight things that stand out.
100%, perfect. So
read the question and tell me what stands out for you.
Oh, I must read it out loud.
Yeah, read the whole thing and tell me what you're thinking as you go through this. Because remember, the first thing you need to do in an exam, whenever you get a question, is you need to read the required. So I went to the required, I read the required, I saw the required says we need to do a net present value calculation. That's the important part. Agree?
100%. 100% agree.
Okay, so because I'm looking at net present value, obviously this is looking at a time value of money calculation, which requires cash flows, right?
Right.
Does it make sense?
Yeah. 100%.
Okay, with cash flows, you're obviously going to have a timeline looking at years or months, depending on the question. You won't know what you have to calculate yet until you've read the actual scenario.
Right, 100%.
Okay, so go through the scenario and tell me what you're thinking about.
Perfect. So Fruit Juice is a national distributor of juices that identified an opportunity of acquiring a competitor. So we've got Fruit Juices obviously trying to acquire Best Fruit and has entered into preliminary negotiations. So nothing so far.
Okay, so
additional information
just to add to that, this is an expansion, okay, decision. So you didn't send me any of the study guide material. It was just the past paper. So I'm hoping that in your study guide, there would have been something that spoke about relevant costs associated with decision making. So when you have a scenario like this, this is actually an acquisition. You're purchasing a business, you're expanding the current operations of the business. That decision is an expansionary decision. It's not a replacement decision. Because it's expansion, okay, I'm actually buying something new that's going to add value to the business. It's not replacement. So if it was replacements, then you're going to have to look at old versus new. But that's not the case here. So if it's expansion, we're only going to be looking at the current scenario and what's going to happen if I purchase this new business. All right, so that is a difference.
Brilliant.
In capital budgeting calculations, you get two potential scenarios, either expansion or replacement. Okay, because this is expansion, the old isn't relevant. So I'm only going to look at the new. I don't have to compare the old and the new. That can come up in certain questions, but that's not relevant here because you're purchasing something.
Okay, cool.
Okay, additional information?
Additional information, it says as follows: an amount of 2 million rand is to be spent on the capital expenditure. So I would highlight the 2 million rand spent on capital expenditure.
Why? What is it?
And that is to upgrade. That's to upgrade the computer technology takeover by Fruit Juice.
Okay, so it's good that you're highlighting the 2 million. Why?
Because it's an expense.
No, it's not an expense. They said it's capital expenditure. Capital expenditure is not an expense. What is capital expenditure? What is CapEx?
It's an upfront payment.
For what?
For, in this case, upgrading computer technology.
Yes, so it's actually capital in nature. So when you're looking at capital expenditure, CapEx relates to purchasing an asset acquisition. Remember, this is seen as investment. So this would be the initial outflow. Remember, if you're going to be purchasing a business, you're going to have to raise capital to make the acquisition. Okay, that particular business comes with all sorts of benefits in the form of assets. You might buy machinery, you might buy software, you might buy, I don't know, patents, whatever it is, copyright, doesn't matter. But this is the initial, okay, outflow that's required to acquire this particular business. Okay, they've even told you the expenditure will be in year 0. So if we're looking at time value of money, where is this? This is right at the beginning. Does it make sense?
It's even before year 1.
Well, year 1 is what happens in the first year. So initial investment, I&V, and then you have operating cash flow, OCF, and then you have a terminal cash flow. Okay, those are different cash flows that can be monitored and calculated in a capital budgeting exercise. Right, this is just pure time value of money theory, which the actual study guide should have hopefully have covered, or the textbook that you are using. Right, so initial investment.
It didn't cover it exactly like that, but it did cover.
Initial investment is the price that you pay for something. Okay, obviously operating cash flow is what you receive over the life of the asset, and then the terminal cash flow or the cash flow at the end of the life of the project. Those are three cash flows you need to monitor.
Absolutely.
Okay, so bullet number one here, initial investments.
Absolutely, 100%.
Okay, what else? Keep reading.
Also, what I would do, like obviously in the, a lot of the times they give you the actual table at the bottom. So I would know straight away that 2 million would be going into year zero if there was a space for it. But that's just...
Yeah, don't worry too much about the answer. We'll structure the answer later. We first need to understand the situation. So remember exam technique, read the question, see what is being asked, then you can hone your attention on the specific topic. So this topic is net present value. We just spoke about that. Obviously, net present value requires cash flows, right? I know I'm going to be drawing some sort of picture where I have initial investment, operating cash flows, a possible terminal cash flow, and I'm going to be discounting all of that back at a specific rate.
Brilliant.
Okay, so this is theory in line with the question. Yeah, you've got to understand the context first before you can do any workings. That's why I'm asking you to go through it. So you read the required, then you read the question once, highlight everything that's important, then you go back to the required, look at what they've given you, then you start answering the question.
Brilliant. Brilliant. So then it says best fruit is segmented into two divisions, consumer and industry product divisions. Then it says sales revenue for the consumer product is expected to be 4.5 million in year one. Highlight that, 4.5 million. And industry products, 6.2 million for year one. So those are for the two different products.
Good. So that's operating cash flow, right? So they're selling two products.
Right.
What is the first product? Consumer.
First consumer, and the other one is industry product.
Okay, so we know we have two bits and pieces of information that relate to what? The OCF. Okay, this is operational, right?
Yeah, 100%.
Okay. Keep reading.
We
what
know
else?
that for revenue is expected to grow at 6% per annum for both the customer and industry products division due to increasing demand as a result of the COVID-19 pandemic. So we know both of them throughout the next 2 years are going to grow by 6%.
Okay, so we can say, obviously, in terms of revenue growth, you're going to have plus, what is it, 6%?
Yeah,
6% per annum. Okay, so this is important, all right, when doing calculations in the actual question. Okay, this is your OCF growth over a period of time.
Brilliant. The cost of sales for both divisions is expected to be 70% of sales revenue for the first year of the forecast period. So we know that both of them, their cost is going to be 70% of their revenue for the first year only.
Okay, so what is that speaking to? Which calculation?
This is, well, it's not, the word is the expenses, well, not expenses, could be expenses.
It must be expenses. Cost of sales, right? Obviously, if we're going to be selling these products, it's going to cost us money to either produce or buy and sell, right? Okay, so this bullet speaks to what? Not the income part of the operating costs, okay, but the expenditure.
Expenses.
Make sense?
100%. I mean, they have to purchase stuff in order to be able to make the product.
Exactly. Okay. What else? Keep going.
And we know obviously that it's going to be 70% of the sales revenue.
Yes.
Fine. It's anticipated that a gross margin of 30% will be maintained in years 2 to 4 for the consumer product division, while a margin of 40% will be applicable to the industry division from years 2 to 4. Meaning that their gross margin obviously is growing differently.
What is a margin? Do you know what a margin is?
In my brain.
What is the margin relating to?
So in this situation is the profit.
Yes. Okay. Basically, so obviously, if you're looking at sales or revenue and you're looking at cost of sales, there's obviously going to have to be some sort of gross profit, right?
Right, 100%.
So there's going to be a gross profit calculation that we need to consider, which is going to basically be your income less expenses. In this case, sales less cost of sales. Okay, what else?
Indirect costs.
Oh, just before we move on, they said anticipated. What does that mean?
That it's not a 100% figure.
No, it's a target. It's a benchmark. It's something that you want to achieve, right? Do you agree in reality things don't always go according to plan, right?
Absolutely.
Okay, obviously when you sell goods, you're going to want to target a certain margin, right? Okay, so if you're billing your client for a marketing campaign, you're probably going to add some sort of margin to all your quotes because obviously you're not going to be running at a cost. You're going to be running at a profit, hopefully.
Absolutely.
So if we're selling products, then obviously we can target a specific margin. We can say, okay, for gross profit for consumer products, we're achieving or wanting to achieve 30%. For the industry products, we're going to want to achieve 40%. So that's just our target in terms of gross profit margin.
And can we take that as an actual figure, or are you saying no because it's
it's anticipated? So depending on what we have in the question, remember this is not what they're going to actually have. It's just anticipated. So obviously, if the actual gross profit is more or less, then you can say they're doing better or worse. Does that make sense?
Right. 100%, exactly. If they were to ask to say, like, is it whether they want it to be or not?
Yeah, that's a decision question. So this is what they want, or this is what they anticipate.
Right.
Okay, obviously, what the reality is, it might be a little bit different.
Right. 100%.
Okay, so if they give you the reality, then you can compare it to what they anticipate. You can say it was better than expected or worse than expected. That would be more like a theory type question if they asked you that later in the question.
Right. Okay, awesome.
Okay, remember, this is just your understanding as you read the question, just to think about things that could come up later on.
Okay, cool.
Okay, keep going, next one.
So then we said indirect costs will amount to 2 million Rand in the first year. So that's meaning that we're going to have things that aren't, directly related to the manufacturing or, of the direct product to 2 million. And then thereafter is going to grow by 5% per annum for the rest of the forecast period. So we know that for year one, it's going to be 2 million, and thereafter is going to be plus 5% each year.
Okay, so what are we looking at here? We're looking at income or expenses?
Oh, expenses.
Okay, keep going.
The weighted average cost of capital is 6% and the rate of taxation is 27%, which is important to remember. And the asking price for the business is 2 million Rand. And then that information is going to be key for later when we do our NPV to be able to say the business, yes, can produce over 2 million or can't produce over 2 million, which would make us a decision whether or not we want it or not.
Yeah, so that's the discount rate, eh? Okay, that's good. Yeah, so WACC is good. Obviously, weighted average cost of capital. I don't know how much understanding you have in terms of WACC. If they've asked you to calculate WACC in the past, if you're doing a different module, you might be required to calculate WACC. Because with WACC, you would look at cost of equity and you look at cost of debt. This tax rate would apply to cost of debt. But because they've given you the weighted average cost of capital, you can assume they've taken tax into consideration when calculating the cost of debt and adding that to the cost of equity to get the weighted average cost of capital. So you don't have to work out this WACC, it's given. I would just use it as is.
Okay, brilliant.
Okay.
Awesome.
Yeah, the tax is important for what? Income or expenses?
One second, I'll tell you. The tax is for the expenses.
Yeah, so it'll be part of your expenses to calculate your actual profit at the end, basically, once you've calculated everything. Does it make sense?
Yeah,
okay, that's basically it. Obviously, the asking price again, same as what you read earlier, hey?
Exactly.
Okay. All right. So now.
Well, sorry, if I can just jump in there. The asking price won't always be the same as the capital expenditure. It just happens to be.
Well, the asking price for the business is the capital expenditure because you're asked to purchase the business. You're buying a business here. You're not buying an asset. The asset is the business.
100%. But in the first one, the 2 million is spent on capital expenditure only just to upgrade the computer technology and not actually with regards to the distribution of the fruit.
Well, it says here that the 2 million is spent on capital expenditure in upgrading computer technology at takeover by fruit juice. So you're purchasing the asset and you're investing you're purchasing an asset that's going to add value to your business. Because remember, you are fruit juice, right? You're buying best fruit, right?
Absolutely.
So best fruit comes at a price. You're paying 2 million for best fruit, and that's going to be used for technology that's improving your business. So yeah, this 2 million relates to that 2 million.
Fine.
I don't see a difference there. I see it as the same amount.
Oh no, because I would just think that the asking price for the business is 2 million, and your capital expenditure on just one aspect of on one asset of the business. Do you understand what I'm saying?
What do you mean one asset? It's remember the business is the whole thing. You're buying the whole company. You're buying best fruits.
100%, which is in theory another fruit company.
Which is capex. If you're purchasing a business that produces fruit, that's capex.
Right, 100%. But that first one isn't an acquisition of the actual business; it's an acquisition of only the technology part of the business.
So what are you saying? You're saying this is actually capital allowances. So this would be like a capital allowance. Do you cover capital allowances?
I think he's actually purchasing the technology.
Okay, well, if there is a capital allowance, that's a tax deduction, then you can bring that into your discussion here. So less possible capital allowances for investments in depreciable assets.
Yeah. I just don't know. I mean, then they would have, I don't know. Then they would have given us information of how it depreciates, no?
Well, they should have, yes. They should have given you some level of deductions in terms of your capital allowances. Unless you've covered this in your study guide. I don't know your level of understanding of capital allowances because this is not a tax module, it's financial management, but it can come up. Capital allowances is definitely something you'd have to consider, but again, I don't know how detailed your understanding is in line with the module.
Yeah. Well, in the study guide, we go into two aspects. We go into a normal, like a tax shield, if you should call it.
Yeah, that's just a tax benefit. It's a tax saving, basically, because of the depreciation. So tax shield is just the tax benefits from depreciation or for depreciation.
No, perfect.
Okay, because remember, depreciation is the writing off of this asset over a period of time.
Exactly. Yeah, maybe I'm just making you complicated and overthinking.
No, it's good that you're raising it, and that might be part of the question. If they give it to you, it's something you can definitely consider. Yeah, okay. Does that make sense?
Yeah, 100%.
All right, they gave you a template here. So this is the template that you need to calculate. Okay, there's the
Yes,
template.
100%.
It's given. Okay, just to save time, I'm just going to put it up so we can discuss it. All right, so at least we can understand how to calculate each of these amounts. Does it make sense?
100%. This was actually one of the questions that I wanted to ask you.
Okay, that's good. So that's why we're going through it. So that's great. Okay, so obviously the first thing that we did was we understood the question. We did a little sketch, a diagram. This is something I would write down in my actual answer sheet if this was a written paper. This would all be part of my workings. And then afterwards, I would recreate this if it was a written exam, and then I would just basically do calculations for each of them. Does it make sense?
Brilliant. 100%. So mine's online, and they give me exactly that, just without the figures filled out.
Okay, that's good. Then it's just a matter of plugging in what you need to.
Exactly. And then obviously making notes on the side of how I do that calculation.
All right, yeah. I just want to put in all of those descriptions. Okay, but while I do that, just explain what else you're going to be doing now when you're doing the calculation. What else would you do?
In terms of?
Think about what we just did. From an exam technique point of view, what must you do?
Oh, I'll go back and read what's required.
Yes, but now this time we're going to be taking amounts that we have already identified, and then we're going to be plugging those values in to the actual template that they've given you to answer.
Absolutely.
Okay, so that's what we're going to be doing now. Obviously, this template you don't have to draw up because it would have been given, but I just copied it from the document. All right, so most important is, can you get to the calculation? So let's do the workings.
Absolutely. So
I'll just do one year because you've got all of them, and then you can obviously do the rest just to practice. I'll just do 1 year. Is that all right?
Yeah, 100%. I've got a few, and then I got stuck, and that's why I needed help.
If it's an increase in revenue or something, then we'll do more of it. We'll just see, okay? All right, 100%. Important line items. This is a total gross profit. This is a total gross profits. Consolidated gross profit is a very big total. That covers all of the profits. Then you've got costs. Here's another total. Here's another total. Those are separate totals. And then the cash flow is the last one. Okay, the cash flows is what you actually need to do your time value of money. Okay, so having read the scenario, we said there were two products earning revenue, and the revenue is going to generate or increase by 6%. So we need to go back. Okay, let me leave that part up. All right, and then I'll just show it to you. So revenue for the consumer in year one, what was it?
4.5.
4.5 million. For the industry?
Yeah.
6.2, right?
6.2.
Okay, every year,
the
revenue of the consumer is increasing by
6%.
6%. Okay, notice I'm timesing by 1.06. That's adding 6%. Does that make sense? Can you see that?
100%.
And I would do that each year to add it on. Make sense?
Absolutely.
Revenue for the industry, is it also 6%?
Yes.
Same thing. Do you see what I did?
Absolutely.
Okay. Any questions so far? If you have a question, stop me. Are you happy with the revenue increasing?
No, I've got so far. Perfectly.
Okay. Cost of sales for the consumer was 70% of sales. Agree? So this
100%.
times 70%. Does that make sense?
100%.
And then again, times 70%. Does that make sense?
Yes, 100%.
Okay. Obviously, that's going to be duplicated for all the years. It'll be 70% of the revenue. Okay, we spoke about this earlier.
That was what my question was. Is it going to be duplicated? Because in the question, it only said for first year.
The revenue is growing. So if the revenue is growing,
So the cost of
obviously
sales-
the cost of sales is going to be based on the actual sales revenue.
That's what I thought, but then it said over there in the question for first year of the forecast period.
It's 70% of sales for the first year of the forecast period. For the first year. So this assumption holds true for the first year.
2, 3, and 4.
Do they say anything about the costs for the second and third year? They gave you the indirect costs for the first year, and then they spoke about the growth. So are you saying there's zero growth here? So are you assuming zero growth?
I don't know. That's where I was confused. I'm not sure. That's why I wanted to ask you. I'm saying when I get a question like that, how do I know? Do I assume that there's zero growth, or do I continue with the 70%? Why did they say for the first year of the forecast period? Again, I don't know. I'm asking.
Yeah, I didn't set this paper, so I don't know what their thinking was. They should have maybe have been a bit more clear in terms of the growth aspect of it. I agree with you. If it is first year, then maybe it's just going to be costs. So you're saying it's going to be the 315 every single year, but that's not logical because obviously costs go up each year due to inflation, right? And obviously if you're producing more in 1 year, you'd expect your cost to increase, not so?
100%.
So my expectation would be costs are associated or linked to levels of production, not so?
Yeah, I think increase in consumption.
So if I'm producing more, I would expect to have more cost, not so?
I agree with you.
Yeah, so I wouldn't assume that 3.15 million is gonna stay 3.15 million year 2, year 3, and year 4. Assuming we're selling more and we're making more, that doesn't make any sense to me.
100%. I agree with you. That's why I was just confused as to what I would apply for the cost of sales for year 2, 3, and 4.
I mean, they could have said something like costs would have remained the same, or they could say costs are going to stay the same. If they say no growth, something like that, then I would assume that it stays the same. But I don't think that that's very realistic.
Cool.
Okay, you have an answer. What did they do? Yeah, they did increase it. See? Same as these figures. Exactly the same.
Oh, fine. Okay, perfect.
All right. Just the industry.
Yeah, that's what I got.
The industry. That's wrong, hey? Industry costs, cost of sales for the industry. You see that?
Yeah.
Okay, so their memo is not even right. The cost of sales is not, it's right. The first one's right. Look, the first one's right. The second one's wrong.
Yeah, spot on.
Wrong. So these ones in their memo needs to be corrected.
Cool.
Okay, but
I was confused.
Yeah, but the rest is fine. That's fine. Make sense?
Yeah.
Okay, I don't know where they got these figures from because there wasn't any information here that said the costs were going to change.
100%.
All right,
agreed.
so
that's why I was confused. I would go with I'd bank you.
So this is a problem. Yeah, that's something you could query with the examiner. If this is a if you get the memo or if you get a review or something like that, then I would query that with the institution.
They don't give me my paper back.
Okay, that's. But can't you appeal? Can't you?
You can
ask for a remark or something like that.
But they literally don't. I can ask for a remark, but I don't know where I'm asking for remarks because I'm not allowed. Apparently, according to the law, they don't give you your exam back.
Okay, that's weird. That's strange. Yeah, but every institution works a bit differently. So obviously, you just need to follow the rules. But obviously, first prize is just to pass. You've done a lot already. You've already got all of these marks, so you're on your way to passing anyway. Okay.
Awesome. Thanks.
All right. So we've covered that. But gross profit. How do you calculate gross profit? Do you know?
Yes, I do. Give me 1 second.
You sum up all the revenue, right?
Right.
And you minus all the costs, right?
Give me 1 second. I want to just open up to that page in my notes.
Revenue minus expenses. Cost of sales minus cost of sales, right?
This is for gross profit. Yeah, sales minus cost of sales.
Hold on. I think they've actually done it separately. Yeah. This is consumer and that's consumer. So these two go together.
Right,
and
so
then
you
those
do
two
the
go
4, 5
together.
minus the 3, 1, 5.
Yeah, so
exactly.
it's gonna be this one plus, not plus, minus that one. Okay, and then it's gonna be this one minus that one. Make sense?
Exactly, 100%.
Okay, and then you would just do that all the time. Okay, obviously if it's a consolidated profit, you're adding up these two figures. We spoke about that earlier, remember? Consolidated profit means to sum up, not so?
Yeah, 100%.
Okay, so we're going to sum up those figures. Okay, happy with the profit so far?
I'm very happy.
Okay, indirect cost, we need to go back to what we read. They said it was 2 million in the first year, growing at 5%.
100%, so 2 million, and then the next one's 2 million times 1.05.
Okay, profit before tax, how do you get that?
So
consolidated gross profit less the cost, not so?
Yes.
Profit before tax. That's just an accounting line item, basically. Happy with that?
100%.
Taxation
of 27%.
So 27% of this, right?
Yeah, so that equals times 1.27.
0.27.
Right.
Agree?
100%.
And then what?
And you do profit before tax minus
after tax.
taxation.
After tax. After tax means subtract the tax, right?
Exactly. So you do profit before tax minus profit after tax. I mean minus taxation, sorry.
Yeah. Okay, let's just make this a bit bigger. Just so we can see the rands and cents. Okay. Did they ask you to round off here? Was there any instructions? No, there weren't any instructions.
I think there aren't instructions, but generally they say per question round off the whole figures or to 2 decimals.
Okay, then you can just round it off. Wrong way.
Oh yeah. Spot on.
There we go. All right, tax shield. Okay, so this is what we spoke about earlier. Remember about the depreciable assets, the capital allowances?
Yeah.
This 2 million?
Yeah, 100%. Yes.
This 2 million that you spoke about. So you could assume a capital allowance here. But, okay, when we're looking at capital allowances, you need to know what type of business this is, because sometimes businesses that are SMMEs, they get an accelerated depreciation in terms of capital allowances. I don't know if you've covered any of this in tax, if you've even done tax.
Well, I haven't done tax.
Okay, so what is the what is the capital allowance portion that you've learned about in your module? They must give you something, because you can use the 2 million, but then it's going to be 2 million times the 27%. That's going to be very high. Let's see what they use in the question.
I think they divide it.
Okay, the tax shield.
2 million divided by 4.
2 million divided by 4. So 25% a year. Is that right?
I think so.
Okay, so I'm just going to put a note here. Notes. See capital allowances in the study guide.
Yeah.
Okay, just double check. You're saying 2 mil divide by 4 years. So in other words, 25% a year, right?
So I'm pulling up the study guide now as we talk.
So 25%. What is that going to give me? That's going to give me 2 million. 2 million times 25% is what? 500,000. Okay, times the 27% gives you the tax saving of how much? 500 times 27%? Yeah, that's right. Okay, it does work. You get the same answer as what they've got.
So how did you do that? Sorry?
Well, you told me that the capital allowances that you've used is 4 years or 25% per annum, right? So I just calculated, okay, what the actual depreciation or wear and tear allowance is going to be.
Like a straight line, obviously.
Well, Yeah, I'm just using what you
straight line
told me.
depreciation.
You said you've been using 4 years or 25%, right? Remember, this
Well, the
depends
only
on the
reason why I
type of
use 4 years is
business.
because it's year 1, 2, 3, and 4.
Okay, yeah, that's fine. You can use that. So per year, there's nothing wrong with it. That's perfect.
Yeah.
That's fine. Okay, but then you're just assuming,
Brilliant.
yeah, you're assuming that it's being written off equally. That's the assumption that you're making.
Yeah, 100%. That's my assumption. Because it never gave me any other information as to how it depreciated.
Correct. Yeah, straight
Or
line.
how it was how it was taken off.
Yeah, so they should have maybe have given you some additional information here, but remember this is capital allowances. Okay, it's fine to use straight line, but again, it's just an assumption. So again, that's why I'm asking you just to go back to your study guide, just to double check this.
100%.
Okay.
So over here, there's the two ways that they do it is either using the tax shield method, or the other way they use it is using the depreciation add back method.
Yeah, well, remember the tax shield is depreciation that you're adding back, but you're not adding back the depreciation. You're adding back, okay, the portion that you're getting. In other words, you're saving a certain amount because depreciation, remember, is a write-off. You write it off, so in other words, you pay less taxes, not so?
Yes.
So the tax shield, would you agree, is a benefit, right?
Right.
And that's why they've shown it here. See? There's it there. It's a benefit.
Okay, brilliant. Brilliant. So the calculation would be 2 mil divided by the amount of years.
In this case, you're assuming straight line. That's why you divide it by 4, 25%. Right.
Exactly.
Okay, but again, you can have accelerated depreciation, eh? That's why I'm saying make sure you understand what a capital allowance is. Okay. All right, so yeah, the 135 will stay there, assuming it's the same straight line. All right, and then just add the tax shield, which is the tax benefit, basically. Make sense?
Yeah.
Okay, obviously these answers are different to the ones that you've been given because I don't agree with this working here.
Yeah, 100%.
Okay. This is something that I would query. Sorry?
Thank you. Could you just go through 1 second how you got those cash flows? How you got the 101,8300?
I just took this and I added the tax shield. Yeah. Add back.
What? Sorry?
This line, profit after tax plus the tax shield. You have to add.
Okay, perfect. 100%.
Just adding these two. Because remember, this is the benefits. Make sense?
100%. Perfect.
Okay. All right, and then literally you're just going to plug that into your calculator. So now we need to use that HP that you have. So let me write down the steps. Okay, we're going to use these amounts. So I'm going to put these amounts in. Okay. Oh, we don't have to just minus 2 million. Okay. 1, 2, 3, 4. Okay, agree?
100%.
Oh, I see this also needs to be rounded off.
Yeah.
Okay, so that's what we're going to put in the calculator. Right, and then you're going to put your rates. Rate in this case was the WACC.
Which is 6 and taxation.
And then you're going to solve for NPV on the calculator. Okay, so okay, so I just want to get a picture of this thing so I can tell you what buttons to press. Okay. All right, so let's go back to that working quick. All right, maybe let me put this separate. Okay, there, that's fine. Okay, so, all right, so on your calculator, you need to clear your calculator first. So there is see all here at the bottom. So to clear all, you need to press this red button. So the red button is color coded with the function, right? So press the red arrow down and then see all. That's to clear all. Okay, that's how you clear your calculator's memory.
Cool.
Okay, then you need to insert the cash flows. Where's the I button? There, the CFJ. Okay, so then you need to insert this number. So you need to type in this number. So
do you not need to do payments per year? No.
No, that's a time value of money calculation. That's not what we're looking at. We're looking at net present value. Okay, as long as your payments per year is 1, that's fine. I don't know if you've changed the setting. If you've changed the setting,
well,
you need
that's
to leave.
What I'm saying. I don't know if that's what I meant. So I don't know if my setting.
Okay, well, let's see what you get first, and then we can discuss if it's right or not. Okay, then you need to press CFJ. That's the cash flow. Let's just check, is it the right button? Yeah, it looks right. Okay, so then you press that button, press that button, press that button. Okay, then afterwards you need to insert a rate. So your rate is your WACC, your I. So we need to insert
top left one to the right.
The IRR. No, that's IRR. That's the effective rate. That's nominal. That's NPV is what you're solving for. So I think this I over R will work.
Yeah, that's it.
Let's put that in as 6. So 6. And then the I over YR. And then you press the red button and press or select the NPV. And then you'll get an answer. Let me get my financial calculator.
8, what's that? 108, 108, 898. 5, 8, 2, 2, 1, 2. Can I tell you what my total is?
Yeah, you can tell me what the NPV is. I'm going to work it out as well.
2440.
Okay, just hold on. Let me work it out first, and then you can tell me what it is. Cash. Okay, so 6%, and then minus 2 million. Okay, first amount 101,8300. 108, 5898, 1158282, and the last one 1235775. All right. NPV solve.
You didn't do 6 IRR on.
Yeah, I've already put all of that in. Okay, what did you get?
I got 2,440,792.
No, you should be getting 187,847.181. There, that's it.
Get that. 1 second. Clear all. Mine says 12 PYR.
Oh, that's a problem. So you need to change the PY over R. So you need to press 1. So press 1 and then press a red button, P over Y. P over YR. Where's the P over Y? Here's P over YR. You see it?
All right.
So press red button One, press P over Y. Then press clear all. Shift clear all. Do you still have the same answer? You have one.
So now I have one payment per year.
Okay, then do it again. No, just type everything in and then let's see what you get.
Is that 896 or 898? 896.
Which one?
CFJ 2.
108 5898.
098. Okay. And that's 115.
8282.
That's 1, 2, 3, 5, 7, 7, 5. And that's 6. 1R. Yeah, I've got the same as you. 1878471.
You're getting it. Okay, that's good. That's good. Same value, eh?
Yeah.
Okay, there we go. That's how you do an NPV calculation.
Cool. That's brilliant.
All right, so that's that. Let's move this back here in case we need the calculator later. Right, that's it. That's question one. What else do you have to do? Recommend whether you consider the acquisition to be viable. Is this NPV positive or negative?
It's positive and it's below what they wanted it for.
Positive NPV, so you accept the project, right? Okay, purchase price is viable as purchase price 2 million and valuation is accordingly 1 million benefit assuming level of forecast. Okay, so their working is different.
Well, they got it wrong because of their calculation, yeah.
Because they used different amounts here. We used these ones. They used those amounts. The NPV is still massive though. I don't think the NPV is right here. Let's type in their values. That doesn't look right to me. That looks way too big. Okay, let's do another NPV calculation using theirs.
Okay, cool.
On your calculator, insert 6.
I just ask a question?
Question, yeah. Remember in the exam, you show them every single working you've done. Exactly like everything I'm typing here, everything I'm doing here, all of this, I would be writing it down in a written paper if this was written, or typing it out or whatever. But everything here needs to be shown because you don't know what's going to be marked or not.
Yeah, 100%. Okay.
Let's put all these figures in. 1565 654 1666
300, no?
804 1774 830. Okay, solve for NPV. Oh, the NPV is correct. It's a bit off though. I get 315,9399.239. I don't know. Did you get the same figure here for this one?
Yeah.
Using their figures, using these figures.
Yeah. Yeah.
Okay. Yeah, their figures are a bit different to ours because of that line item, that one cost of sale thing. Okay, ours is a bit lower than theirs because the cash flows for those periods are a bit lower because of the increase in the cost of sales.
100%. So my question is even let's say if we went with our answer, which is the correct answer, that's a positive NPV, but it still costs them 2 million rand. The purchase price is 2 million and our NPV is only 1.8. Would you still go ahead with the project? No.
No, you will go because remember this was the initial. This is the initial investment.
Right.
You are looking at the initial investment. You are paying 2 million. You are getting a return on investment. Positive NPV, you accept the project.
Okay, cool.
Because this is what you are investing. This is what you're getting. So your answer would have been the same here, except this figure would have been that figure. And you don't subtract the two. That's incorrect. NPV, NPV, the formula for NPV is the present value for the future cash flows less the initial investment. This is the formula for NPV. NPV already takes the initial investment into consideration. So if it's positive, you always accept it. You don't subtract 2 million after you've got it. The 2 million is already there. It's already subtracted. It's part of the working. Make sense?
Makes sense.
Okay.
100%.
All right. Happy with this question?
Cool. Yeah, very happy. Thank you.
Okay, I'm just going to label these Q1, and then let's use a new sheet Q2. I'll send you the Excel spreadsheet afterwards when we're done. Okay. Next one. Okay. All right. Exam technique. You tell me. What do I do?
Read what's required.
Good. What does the required say? Use ABC costing. Allocate the indirect costs to each division based on the information provided. Okay, and they've given you this. So all they want you to do is take that and allocate costs. Now, that's a nice question. This is actually management accounting more than finance.
Yeah.
Okay, so let's do the allocation.
Let's see here. Quite interesting. I never got the layout.
Did they not give you this template? It says make use of the template below.
Yeah, I know. It says it over here in mine, and it didn't actually give it to me, quite interestingly.
Yeah, that's not good. They should have given it to you if they said use the template, because then you won't know how to structure it. Right? Obviously you could structure it the way that you want to, but this is showing it as per their answer or marking memo, whatever it is. Okay. All right, so let's go to the question. Let's see what we have here. Consulting revenue, that would be the revenue. So you're going to put in the amounts here. Now I'm reading the question and I'm putting in information. Agree? Same as what we did before. Exam technique, right? Costs is a percentage of that. So this would be 66%. Next one, 70%. Next one, 75%. Last one, 50%. Happy with what I did there?
Absolutely. Gross profit is sales revenue minus cost of sales.
Yes. Okay, now we need to look at the allocation. So how are we allocating rent? Based on the activity. So the indirect costs need to be distributed. So this is a mathematical calculation where you need to allocate cost to all of these departments. Does that make sense?
Right. 100%.
Okay. So the total 840, the total for electricity 580, and the insurance 2.5 million. Okay, those totals, those amounts need to be allocated based on the cost allocation method. Right, and obviously that needs to be given to you in the exam. Otherwise, you won't know what to do. Okay, so...
Well, sometimes it gives it to you. Sometimes they actually make you try and guess it.
Well, you can't guess the floor space or the staff numbers. That would be impossible. You would have to...
Agreed.
Yeah, you would have to use what's given. So obviously rent, I'm not going to allocate according to staff numbers. Does that make sense?
Yeah, no, for sure.
So this they don't have to give you, but they have to give you that.
Yeah, that I agree with you. That's
okay, because
what I meant was sometimes they don't give you the direct correlation.
Yeah, I agree with you. They might not tell you that you must allocate cost according to floor space, but you should know that rental is based on floor space. The floor space is the cost driver, not so?
Yes.
100%. Okay. All right. So let's do the working for rent. We need to add up the total floor space. I'm just going to add a column here. Just put it allocation, just to write down the total. What is the total? Floor space, 2,500 plus 2,000 plus 1,000 plus 500 gives you 6,000 square meters. Okay, so if I'm allocating rent to the bank, I'm going to take this amount, I'm going to fix that, okay, and I'm going to times that by, all right, the 2,500, and I'm going to divide that by the total, which was 6,000. Do you agree?
Agreed.
Okay, and then I would do the same for all of them, except I would just use the relevant floor space. So the commercial corporation, the companies, it says companies here. Did I get it wrong? Oh, commercial corporations. Yeah, it looks like it's not tying up with the question. Can you see that? Okay, I'm just going to call this companies.
100%.
Okay, I'm just going to write companies there as
the
well.
One in the last exam was exactly the same.
Okay.
They changed the names.
They probably recycle questions as they go, but that will be 2,000. So change it to 2,000. This one is 1,000. Change that to 1,000. And the last one is 500. Happy with what I did there?
Yes, 100%. Can I just run through the calculation with you 1 second?
Okay.
You wanted to get the say again?
Yeah, explain it. What happened?
We obviously the indirect cost, which is the rent of the 840,000 rand, goes to the floor space. In the bank business, they're using 2,500 meters squared. So what we would do is we would take the way I looked at was 840,000 rand divided by 6,000
times 2,500.
Which is the total
yes.
floor. Yeah. And then that amount times 2,500. Is that what you did?
Yeah. I just used a fraction. It's a fraction of the floor space.
Fine. Okay, perfect. No, just making sure that it was the same way.
Make sense?
100%.
Okay, electricity is allocated according to staff members. So same scenario. Add up the staff members. How many do I have? I've got 10 plus 15 plus 80 plus 55 gives me a total of 160 staff members. Okay, so electricity, that's the cost that I need to allocate.
So you do 580,000 rand divided by a total 160 times each one.
Okay, the next one, the company has 15 people, the clients 80, and the other one 55. There's the allocation. Make sense?
100%.
Okay, the insurance costs are allocated in the same proportion each division of gross profit as the percentage of the total profit. Okay, so this line needs a total. Okay. Sum up all of this. Okay, there's the total. Make sense?
Yeah.
Okay, so my net profits, wrong line, sorry, my insurance costs is a allocation of the gross profits, the total, but each business makes a share of it. So this gross profit, so to get the insurance costs, I'm going to take this 2.5 million and I need to allocate it based on its gross profit share of the total. Make sense?
No, can you say that again?
How much gross profit does the bank make?
That figure, the mass in the way, I can't read it.
Okay. How much does the business make in total?
10 million or so.
Would you agree
560,000.
this is a percentage of the total, right?
Yes.
So it's a
100%.
fraction. This amount divided by that amount gives you the fraction of the business's gross profit from the bank. Make sense?
Yes.
So this figure,
with the gross margin.
multiply by that, divided by this. There's the working.
So it's a 2.5 times
by the gross profit allocation divided by the total. It's a percentage of.
100%.
Okay, and then I would do that for all of them. Right, and then I'll get the same answers they've got. The insurance, yeah, there's it there. All right, and then we're done. We just need to work out the net profit. Net profit is obviously
profit minus
gross profit
expenses.
minus. Okay, make sense?
And
Make sense?
100%.
And then net profit margin is net profit divided by sales times 100. It's the percentage. Make sense?
Yes.
Okay. Happy with that question?
Very happy. That was good.
All right. B, I'm not going to go through. This is a theory question that I'm going to ask you to please look at.
100%. That's
Okay.
cool.
All right. Let's go to question 3. Okay. What is question 3 looking at? There's the required. Okay. So indicate what effects an increase of 10% in the sales price of all 3 products will have on the units sold. Okay. So this is just a mathematics question more than finance.
Yeah.
In terms of the calculation above, advise the percentage changes. Okay, so we look at the percentage change. So they want the change in sales and they want the percentage change. And then
100%.
above, explain the reasons for the percentage change. Okay, that's a theory question relating to the workings. Okay, that's fine. All right, so I see they've given you a temp. Oh, the template is not provided. Okay, so you can actually show this however you want. It's up to you. Okay, obviously
100%.
there's three different products or 3 different departments, whatever it is. Let's just see what we have. Okay, Watch the Space Limited is a manufacturer of fitness watches which come in 3 ranges. Okay, so watches. Range 1 is the starter. Okay, but I'll just do the 1 for starter and then we can just duplicate it for all of them. Okay, so starter retails at a selling price 1,500. This is per unit.
Yes.
Okay. Price elasticity of demand for each unit has been calculated as follows. Okay, so you need an equation. Do you have an equation for the price elasticity of demand? You should have that in your textbook somewhere.
Yeah, it is. PD, so it's the percentage change in quantity over the percentage change in price.
Yes, something like that. So let's just double check it. Okay, yeah, there we go. Price elasticity of demand, quantity of the demanded good, yeah. Okay, price of the demanded good.
We do the percentage change in quantity over the percentage change in price.
Yeah, let's
PD
use this.
Equals.
Yeah, that looks better. I like that formula.
That's what we use.
Good. Yeah. Okay, so let's take that. Yeah, so you definitely need this. And then you can just use that in your working.
So that's what I did. I just plugged in the PED, meaning like the 1.7. This question I was quite good at.
Okay, if you're all right with this question, then we can maybe go through it a bit quicker. I don't want to spend too much time on questions that you're good at. I'd rather spend more time on questions you're struggling with. Does it make sense?
I agree with. Yeah, 100%. So this one I was quite strong with.
All right, then you find this they cover more in economics. You do lots of this type of workings in economics. So maybe economics is your strength, then we don't have to worry too much about this. Do you have any questions about the answer? Maybe just to discuss it then.
This one was quite good actually.
Okay,
with this one.
Did you understand all the workings and how they got them and all of that?
Yeah.
Okay, awesome. All right, then I'm gonna say I'm just gonna say good here. Good to go. All right. Okay, question 4.
Question 4 also was a bit of it's also like calculation. I don't know if it's an economics question or if it's.
Did you struggle with it, or were you right with it, or?
I was okay with this one.
Yeah, this is looking at calculate the total value of the dividends paid. Okay, so what is a dividend? Do you know what a dividend is?
It's a percentage. Well, not a percent. It's not a percentage. It's a. I don't know how to explain it in words, but like it's an amount that is split amongst. I don't know how to give the exact definition of it.
Okay, so what is the context here? If you look at the context, what do we have here? You have a company that has what? Shares, right?
Yeah, shares.
Yeah, so if you're a shareholder in a company, what do you get paid?
Dividends.
Exactly. So it's just a payout of profits.
Yeah, exactly. It's like the amount that they pay out of their profits in accordance to how many shares you hold in the company.
But remember, they don't always pay out everything. So in finance, they talk about retention as well.
Right.
Retention or retained earnings.
Yeah, exactly. I mean, they generally only do it off the profit that's made, like the extra profit.
Yeah, so a dividend is a payout of the profit, but after they've accepted other projects. So if you've got projects that you're going to accept that can generate more value, you're not going to pay out too much dividends. You'd rather grow the business. Okay, keep that money instead of raising capital externally.
Yeah.
Okay, so yeah, you get a dividend payout and you get a retention payout, a retention like a ratio. It's what they keep. It relates to retained earnings. Does that make sense?
Yes.
Okay. Yeah, so based on what I see here, the share capital is 24 million and the value is 25 cents. So you're going to have to calculate the number of shares. So obviously this is market cap divided by price. What is the market cap? 24 million divided by the 25 cents.
Yeah, we do it very differently.
That gives you 60 million shares.
Yeah, we calculate it quite differently. We do the total dividends paid is the number of shares issued times the dividends per share.
24 million. Oh, I wrote times. That's why. Divide. There we go. That's better. Okay, that gives you shares. Okay, then you multiply that by the dividends. What is the dividend? 50 cents.
Yeah.
Yeah, 48 million. When you say you work it out differently, it's shares times the dividends. How else do you work it out?
Oh yeah, that's how we did it. Sorry, I just didn't understand what that beginning part of the calculation that you did was. Could you just say that again?
This is the total share capital, which is 24 million, and each share has a value of 25 cents. So how many shares do you have? 96 million shares.
24 million divided by 0.25.
It's just the price. The total divided by the price gives you the shares, right? Because obviously share price.
The 24 million times 0.50.
Share price times shares equals market value, not so? Or market cap.
Yes.
right? So it's just the opposite. So shares is market cap divided by share price. Make sense?
Yes, 100%.
That's how I got that.
Okay, cool. That makes sense.
Okay.
I didn't do that first part because our buyers have just jumped straight away times 0.5. Giving me an answer of 12 million.
You can't use this because this is not number of shares. This is the issued share capital.
Right. Exactly.
Share
Fine.
capital is
Understand
not shares. Share capital is the value of the shares. There's a difference.
That makes sense.
Okay, that's the value of the shares. Each share is worth 25 cents. There are 96 million shares in this business.
Yeah.
Is that right?
That's perfect. That makes more sense, much more sense now.
Okay, and then B, a percentage increase in wealth. Okay, so here they've given you the equation, or do you have to study this? So if you're investing in a business, increasing shareholders' wealth, what does the shareholder get in terms of wealth? Capital appreciation plus dividend growth, right?
Yes.
Okay, if you're a shareholder, that's what you get, right? Okay, so your return on investment would be the capital appreciation, which was what? We need to go check. The shares are worth 12 Rand. They were bought at 7 Rand 80. Divide by 7 Rand 80 is going to give me capital appreciation. Plus the dividend. What was the dividend? The dividend was 50 cents a share. 50 cents a share times 7 Rand 80 equals. Okay, so ROI 12 minus 7.8 divided by 7.8 gives you that plus 0.50 divided by 7.8. Okay, next line. Zero 0.5 divided by 7.8 is that. So the final ROI is this plus that. Okay, obviously that's a decimal. So make it a percentage times by 100. Okay, that's the answer. Yeah, 60.26. Make sense?
100%.
Okay. Provide the operating cash flow for the period based on information. Okay, operating cash flow is basically the total cash that you've generated. Remember, the total cash that you generated needs to provide for your capital expenditure, your dividends, and then you will have free cash flow. So you have to read the question and see what they gave you. Okay, here's 7 million here. What is this for? Investment. This is CapEx. Do you see that? And then there's free cash flow. And then there was the dividends. So those three. Make sense?
Yes.
Right. Your operating cash flow needs to cover further investment in the business in terms of property, plant, and equipment or whatever. And then you obviously need to pay out your equity shareholders, and then you will have free cash flow, which is what's remaining. So obviously, if I add up all three, I'm going to get that total. So you have to work backwards. So yeah, they showed this at the top, but you're just adding these three. There should be an equation actually for this. OCF has an equation. You might have one in your study guide somewhere.
It's free cash flow equals operating cash flow minus capital expenditure minus dividend. So the fact that they just wanted the operating cash flow means we have to add the rest.
Yeah. There you go. Happy with that one?
Yeah, perfect. And D?
What is this one looking at? The company has forecast an increase in the share price. Okay, so we're going to
before we
increase
go,
the
we
share
increase the
price. So
share
what was the
price,
share
and then
price? The share price was 12. So
12 times 1.1.
okay, the current share price and the increased share price. How much is the increase? 10%.
10%. Yeah.
So this times 1.0, 1.10, 13.2. Yeah, there's the 13.2. There's the new price.
You do the exact same, exactly, do the exact same.
Yeah, and then the dividend increased to?
0.6.
Yeah, so it's basically this again, just with new amounts. Make sense?
13.2 and 0.6. 100%. No, I think the 7.8 stayed the same, no? Oh, it didn't. No, it didn't. Sorry.
No, this is an increase, yeah, because remember your base has changed.
Yeah, 100%.
Because this is looking at the end of the financial year, assuming, okay, that this has changed, and they want you to forecast the percentage increase in wealth. So it's obviously where we are currently. This hasn't happened yet.
Minus the previous year.
Do you agree? This hasn't happened yet. This has happened. Agree?
Agreed.
So if we're looking at a timeline, time 0, when you started, this was 7 Rand 80. Does it make sense?
Yes.
And then
it went to 12.
Yes, and then
12.
And then
12. Oh no, 13.2.
There's 3 years here basically.
100%. And instead of looking at the 7.8, we use it when we get to T2. We don't look at the 7.8. We look at T1, which is the 13.2 minus the 12 instead of the 7.8.
Well,
the new dividend
you can look at T1 or T2. It depends on what you're looking at in terms of growth. You could calculate growth for 2 years, then you would use the 7.8. Or you could calculate growth for 1 year, then you would use the 12. It just depends what period are you looking at.
Fine.
Does that make sense?
Yeah, 100%.
So I can work out if I held it for 2 years, then I would use that as the base. Obviously, that's the start.
Right.
If I'm looking at just this year, then I'm only going to look at those two. It depends on what I'm calculating.
Right, fine, makes sense, 100%.
Okay, because here they asked you about the forecast for the next period.
So you only use the previous year. If they said from the beginning, you would use a T0 amount. So it'd be 13.2 minus 7.8.
Yeah, end of the next year based on the current performance. This is the current performance. This is where we're currently at.
Right.
So the dividend will be increased to 6 cents at the end of the financial year. Assuming the past performance will continue in the next period, you request to forecast a percentage change in growth in the shareholders' wealth. So change in shareholders' wealth. So my wealth is changing from here to there.
Brilliant.
So this figure, what is the answer here? Let's work it out quickly. Let's just quickly copy this. Okay, 15%. Yeah, there's the 15%. Okay, so it's a change in growth from here to there. Right, you could have but this is for the whole period. Does that make sense?
Yeah.
Okay, and then you would have the same thing, except you would have the 7.8 here. and the 7.8 there. But you're going to have more dividends because you got 2 dividends. You got plus, so it'll be 1.1, 50 cents and 60 cents. You got 2 dividends. Does it make sense? Is that right?
No. You would stay with the same.
Oh, the percentage.
Don't you just use the previous?
No, you're right. Okay, 0.6. Oh, but it's 2 years. But then we're not taking the time value of money into consideration. Yeah.
So was it 2 years?
Because you have 2 dividends. Yeah, no, you wouldn't be able to work it out using the 7.8 because it's 2 separate dividends. It's 2 separate years. Yeah, it must be year on year on year. Yeah, that's not going to work because you can't have 1.1 there.
Right, exactly. Yeah, because also the formula that we follow, which is the P1 minus P0 plus D1 over P0, is the share price of the previous period is the new share price, and the D1 is the dividend. So that always uses
P1 and
year.
D1 go together. P0 and P0 go together. Yes.
Exactly. So it's always the previous year. So you wouldn't use the 7.8.
Yes. Yeah. If you're going to stick to the formula, just stick to the formula then. Yeah.
Yeah.
Okay. Is that all right?
Yeah.
Okay, the next one looks very similar. Oh, it remains at 12 Rand, so it doesn't change. Okay. Is that one all right? Same formula, just different context.
Exactly. The only thing that differences again is what we put in, meaning the P0 now changes because the previous year has changed to 12 instead of, the current year is 12 instead of 13.2.
Yep, that's right. Yeah.
So
you have to read the question and see what the question is asking for. Because here they said, should the share price at the end of the financial period remain the same? So it's staying the same. So in other words, you don't have 13.2 here. You've actually got 12.
Exactly. So the formula would literally be 12 minus 12 divided by 0.50, because also the dividend was at 50 cents, not 60 cents.
Yeah, 50 cents. So 12 minus 12 is naught basically. So it's just 50 cents. So it's just your dividend.
Exactly. Which gives us a percentage of 4.17.
Is that all right?
Spot on.
Okay. Right. What is this looking at? Let's see. Choosing a campaign. Oh, I think you asked me about a question like this. All right. So, okay.
Yeah, let's
read the question and then you tell me what is the focus. Before you even look at the solution, we first need to discuss what is the focus here. So let's see if you can pick that up from the question. Right. Question number 5. 1, 2, 3, 4, 5. Okay.
Yeah, that's it.
All right. Come, speak to me. Tell me what's happening. Read it first and then tell me your thoughts.
The marketing department at a cleaner service company has to decide the most lucrative of 2 possible campaigns. Both campaigns will run for 4 months. So we've got 2 different possibilities of campaigns happening, both running for the same period. The first proposal is for a radio, and the second, and the production cost is going to be 70,000 Rand. So you've got expenses already of 70,000 Rand. Actor royalties will cost 10,000 Rand per month. So meaning 10,000 Rand times 4 because it's running for 4 months, and a broadcast fee is of 50,000 per month, 50 times 4 was running for 4 months. ABC figures indicate that the chosen channels will attract 280,000 listeners per month. So we would put that down. The probability of each person to sign a contract is 0.4%, and the contract will endure for 1 year. So of the 280,000 listeners, 0.4 of them are going to sign up, and of those 0.4, it's going to be for 1 year. After administration fees, excluding the cost of campaign, so this is another expense, the cleaning, we won't know what it is, but the cleaning company earns a net margin of 300 Rand per contract. So 300 Rand of the 0.4% that signed up of the 280,000 listeners is the first one.
Second option?
The second option is a social media-based campaign in which setup costs are 62,000, which are just less than the 70,000, and a cost of 0.15 cents per view, which is in theory the listeners. It's anticipated that there will be 275,000 views per month, and the conversion rate would be in the region of 0.3%. In the region of 3.7, I don't know what that means exactly, but I'll read it to you after. Meaning like, okay, fine. The net margin of that campaign excludes advertising costs will be 300 Rand per policy, meaning 300 Rand of the 0.3 of the 275,000 views. Which campaign should the cleaning service choose, radio or social? And from the information that was provided, we'll be able to see what gives what the better turnaround rate is of people who are actually taking a product in the end of the day with cost price. With price.
All right. So you've read the question. Do you understand what's happening?
Yes.
What is the focus here?
A company wants to figure out which advertising campaign they should go by.
Yeah. So as a marketing a professional, how are you going to make a decision? What are you going to base your decision on?
The amount of people that successfully sign up for your product.
Really? That's all you're going to look at?
Well, no, that's not. I mean, obviously taking into consideration that amount of people at your times your cost, times what you're selling it at would give you a higher profit.
Okay,
so really what I'm saying, let me say it again. Really what I'm saying is whichever campaign will give you a higher product. You could have less listeners and less turnaround, but as long as it gives you the higher profit of the both.
Okay, so profit is going to be the key differentiating factor that we need to look at in this scenario, because having read that scenario, did you pick up the income potential?
No, not yet. That's something we would have to calculate.
What income did they speak about? You just read it. They spoke about what? Tell me. Come, you read it. You saw, remember, you just said, okay, you got the first part right. Obviously, in a question like this, your application or your analysis needs to be focused primarily on profit. So you got that. That's good. Okay. As you read. So remember, the required here only said which campaign should cleaning services choose from. Do you agree?
Yes.
There wasn't any guidance in terms of what you should be looking at. Do you agree?
Yes.
So this question requires you to look at the information and then draw a conclusion in terms of what should you be analyzing. So you've hit the nail on the head. Obviously, the main focus is going to be on profit, right?
Right.
Okay, so would you agree? Option one, we want to know how much profit does option one make in comparison to option two, right? Okay, and what were the two options? Option one was, which one was it? The radio or the social media? Oh, the second one was the social media, right? Here's it here.
Yeah.
So option one was the radio and option two was the social media. Okay, so you've got the understanding, okay? Now talk to me about income and talk to me about expenses.
Perfect. So I want to hit expenses first because it's the one that hits me in the face. The radio, one of the biggest expenses is production costs at 70,000. The social media where your setup costs are 62,000.
All right. So you spoke about setup costs.
Yeah. So for radio, it's 70,000, which is the production cost.
Okay, good. So radio.
The radio is actually production. It's not setup, but I suppose it's the same thing, really.
Yeah, you could probably say so. Production cost, setup costs. Let's change it.
Yeah. Social media is set up, so that's spot on. So production cost was 70,000, and the second one was setup costs was 62,000.
Good. What else?
We then have actor royalties will cost 10,000 Rand per month. So we've got 10,000 times 4 for the radio, so 40,000 Rand cost.
Okay, hold on. Let's just write it down. So you're looking at another cost, which is which one? Royalties.
Yeah, exactly. Royalties.
Okay, you said royalties, right?
Yeah, exactly.
Okay. Royalties will cost 10,000 per month, right?
And it runs for 4 months, so 40,000.
Yes, both campaigns run 4 months. Good.
100%.
So how much is that? 40,000, right?
Yeah, 40,000.
10 times 4.
Exactly. And then
what else?
And then there is a broadcast fee of 50,000 Rand per month for 4 months. So that's 200,000 Rand.
For which one? The first one,
for radio.
Okay.
Radio.
All right. Just give me the amount so I can see what you're looking at. Because you spoke about this. Now you're looking at that, right?
Yeah, exactly. That's a broadcast fee.
Okay, fine. Tell me what you're going to do with that.
50,000 times by 4 for the 4 months.
Why times by 4? Yes. Okay, I agree. Okay, it was per month, right? Yes.
Exactly, per month.
This was for broadcasting, right?
Yes, exactly.
Okay, what else? How much was it? 50?
50,000 times by 4.
Okay, next. What else?
I'm jumping to the social media campaign now.
All right.
Another cost for theirs was cost per click.
Okay.
Which was 0.15. And they get 275,000. So it'll be 0.15 times by 275,000.
Yeah, 15 cents times the total views, right?
Exactly.
Okay, your CPC is?
And that total amount is also times by 4 because it's per month they get 275,000.
Correct. So times 4 months.
Yeah.
All right, let's do that working. 0.15 times 275 times 4. Okay, what else?
Now we're going to work into the... Okay, hang on. So now...
Did you cover all the costs?
To the
okay, you said the costs were easier to calculate. Double check. Did you cover all the costs?
Yes. No, we're getting into the next one.
Okay, the 70 you spoke to me about. The 10 you spoke to me about. The 50 you spoke to me about. What else? This you spoke to me about.
0.5.
This you spoke to me about.
Exactly.
Okay, what else?
Okay, so now we're getting into, we've got 280,000 listeners per month. We're going to the radio campaign. I've got 280,000 listeners per month, and the probability of each person to sign a contract is 0.4%. So 280,000.
Okay, what is this speaking towards?
This is more now.
Remember, counting is very easy. You're either making money or paying money, right? What is this?
Yeah, exactly. I'm just trying to think if this is going to be part of making money.
Not so, right? Because you're signing a contract, right? And every person's going to sign up, right?
Exactly.
Okay, and how much are they going to pay you? Or how much you're going to earn, basically. So, okay, you need to give the income now. You've done a lot with the costs. We'll have to go read it again just to make sure we haven't missed anything, and then we can check it. So Okay, so you're
I'm
talking to me about
I'm
this.
working at, yeah, exactly. I'm saying 4% of 280,000 listeners are going to sign a contract. So I want to get how many people that actually is. So it's 280,000 divided or times by 0.4.
Okay, so this is, what income is this? What are we going to call this income? Radio revenue.
Radio revenue, much better.
Okay, so you said you have listeners.
280,000 listeners times 0.4% of them.
0.4%, so that's 0.004. Okay, times. How much?
Is it times by 4 months? Is it 0.04 or 1.04? Could you do times 1.04?
Huh?
For the 0.4%.
0.4% is 0.4%, which is 0.04. What does the percentage sign mean? When you see this, divide by what?
By 100.
Exactly. So what is 0.4 divided by 100?
0.004.
Yes. Is that not right? 0.4 divided by 100 is? Yeah. What's wrong with that?
Yeah. Nothing. No,
okay.
I didn't understand where you got it from.
Oh. Okay, is that all right now?
Yeah, that's perfect.
Okay, what else?
But I was wondering, could I also do 1.04? Or that doesn't work?
1.04? No, why are you timing it by 1? Where are you getting this 1 from?
I don't know. I'm not sure. It's in my brain. I'm not sure where I'm getting it from.
Okay. It's 0.4%. That's it. There is no 1.4. If it was 1.4%, then you would have 1.4%. It's 0.4.
That's fine.
Okay. How much money do we make?
And that's times 4. Because for 4 months. That whole sum times 4.
Well, the listeners is per month, so agree. And how much money do we make?
300 Rand per person that signs up.
Yes. Okay, so we've got that first bit. All right, and we now can work out our revenue. Let's calculate it. I'm just going to move it down and just put the answer here. Okay. Right, so this is what we're going to be making in terms of income. Okay, so you've read 100%. That first part.
Can I ask one question?
Yeah.
Could we just put one extra line just so I see in my, like just in the calculation, how many listeners, what the turnover, how many listeners actually participated to sign a contract? I just want to see the number. Meaning that I just want to see what 280,000 times 0.04 is.
Okay.
You did it all in one sum, which I understand. I just wanted to also see. So 1,120 of the 280,000 listeners signed a contract in 1 month.
Okay, so remember, it comes back to interpretation. So when I read this, a marketing department is basically just looking at two options. Are we going to spend money on radio? Or are we going to spend money on social media? And if we spend money on radio, we can't spend money on social media. So we need to pick between either radio and social media. Does it make sense?
Yeah, agreed.
So,
yeah, 100%. I just wanted to know how.
So if you're looking at revenue, obviously if I place an ad on the radio, not everybody's going to listen to the radio. And of the people that actually do listen, only a very small percentage of the people that listen are actually going to pay me something to provide the service.
Exactly.
So
100%.
4%, 0.4% is a very, very, very conservative estimate of how many people. So if you've got 280,000 listeners, you're saying less than 1%, less than 0.5% of all your listeners are actually going to sign up for this thing, this contract, whatever this contract is for, cleaning. Cleaning.
Agreed.
Does it make sense?
Yes, agreed.
Okay.
And we can see that it's 1,120 people per month.
Yeah. On average, as an estimate, based on their probability. Remember, we don't know how many people actually listen. We don't know how many people are actually going to sign up. This is all capital budgeting, but on a short-term scale. Yeah, this is more like a decision-making type of scenario. It's more mathematics, actually.
Yeah.
But it's maths related to income and expenditure.
Right, 100%. Brilliant. So then on the social media side, you've got the same situation where you've got 275,000 views times 0.003. So that's 275,000 times by 0.003 times by the 4 months times by 300, because that's also 300.
Is it the same, eh? Oh, yeah. Okay.
Yeah. I think it's on the next page.
I see it here on the next page. Yeah. Okay, that's good. Okay.
So that would get.
Is that right?
Yeah, looks like it.
Okay. What else? Did we leave anything out?
No, I think that's everything.
We crossed that, we looked at that, all the amounts we've looked today. Okay, that looks good. Okay, so then we can just wrap up, and we need a total here.
Which is production plus royalties plus broadcasting. And the same, which is CPC plus setup costs.
Okay, and then we can just take the one amount and minus the other.
Revenue minus costs. Yeah, exactly.
Make sense?
Yes, 100%. So we can see that for sure the direction to go is the social media.
Well, not actually. The radio here looks more. The profit's bigger, but let's look at it as a percentage. Percentage profits. So
that's the last zero. Yeah,
take the profit divided by the revenue times 100. Okay, yes, social media is slightly more profitable. Online revenue compared to the cost, the profit is more. As a percentage, it's more, right? Overall, it's less, but it's more bang for buck, basically.
But you get a million rand profit. You get a million rand profit on the radio, and you get 763,000 rand profit.
But remember, you're spending more on radio.
But that's profit after expenses.
Yes, but remember, that's why you have to look at the margin or the markup. Because remember, this is not apples and apples, eh? Different costs, different revenue. Different costs, different revenue. As a percentage, profit over revenue, 76.93%. Agree?
Agreed.
Profit, revenue, as a percent, 77. So technically, social
That's
media
crazy.
is better because I spend less and I make more.
Oh, wow. That's insane. I totally would have not done the percentage profit. I would have just said,
Okay, well, let's see what they
sure.
did.
No,
Okay.
I think you're right.
Oh, I see the amounts are a bit different. Why? Upfront costs, what were our upfront costs? 70 and 62, that's right. The monthly costs, we had 8. Oh, okay. This is wrong. Where's this 55 coming from?
Yeah. I don't know where the 8's coming from either.
And the 8, where's the 8 coming from? Okay, there's a problem
totally
with the
wrong.
answer here. I think they made a mistake here. It should have been 10 and 50.
Yeah, absolutely. I agree with you.
Okay, their memo's wrong again, yeah?
Nice.
Okay, royalties was 10 times 4, and then it was 50 times 4. That's what we had, right? Okay, just be careful.
That's what it says in the question.
Yeah, that's what it says in the question. I agree. Okay. All right, yeah, but the working is fine. I agree with their working. Let's see, what do they do here? 275 times 50, 0.15 times 4 months. Yeah, that looks good. This side's fine.
Yeah.
227, yeah, that's fine. It's just this part that's wrong. Okay, they probably had 2 questions and they didn't change it correctly or something, yeah.
Okay, cool. Happy.
Okay, this looks fine. We had that as well, eh? Okay, their revenue was in line with ours. Online revenue in line with ours, that's fine. And then the sales and the costs, the sales, this is wrong. Okay, sales would have been, oh, that's the gross profit. No, that can't be gross profit. Okay, even the line items here are incorrect. This was revenue. Agree?
Yeah.
Yeah.
Sure.
Okay, the labeling is also off, eh? Sure. Okay.
Yeah.
Yeah, this is definitely not gross profit. This is revenue, right?
Oh, absolutely. Not even a question.
Okay. And then the costs were, this should have been, yeah. Okay, I'm not going to keep this up. I don't think this is right. This needs to be fixed. Yeah, there's problems here. This is a problem. This is also a problem. Okay, there's a few problems here in this memo.
Yeah.
Okay, but yeah, this working is correct. Our working, we just discussed it. We went through it in detail. So yeah. Okay, so don't always trust the answer.
I'll give us 100%.
Yeah, don't always trust the answer. Sometimes there are some issues. So yeah, it's a good thing we're actually going through this. We're picking it up. Has this happened before at the IMM? This is actually, I'm not too familiar with the IMM actually, so you're going to have to give me some insight. Has this happened before? Is this the first?
Yes, it is very, unfortunately, it's very common.
Seriously, yeah.
And it's not fun for a student because you get to the exam and you don't understand the question and then you like think, oh, maybe it's maybe they're asking it wrong, like all the other stuff.
100%, yeah. It is a problem. You need to report and raise this, eh? Yeah.
Yeah, I should, yeah.
Because especially if you're going to be writing this next exam, you don't want to have the same issues in that paper. Yeah.
Well, yeah, exactly.
And it might affect
the fact that I can't even see where I went wrong on my previous paper.
Yeah, I mean, sure. I mean, this is the first paper we look at, and there's already a few like basic mistakes. I mean, that wasn't that bad, hey? And I can't believe they can't get that right. Sure. Yeah.
Yeah.
Okay. Are you happy with that question?
Been involved with the 100%. I can't believe you haven't been involved with the IMM.
No, I haven't. What is the IMM part of? Is it part of one of the big, like, is it IIE or is it AdVTech or what is? Who's it part of?
I don't know.
Is it
it's
private?
its own thing, I think. Yeah.
Okay, yeah, I'm not very familiar with them actually. Yeah.
Don't worry, I'll definitely be putting your name out to some students. Don't stress.
Shame you don't have to. I mean, it's right. I'm quite busy as it is, so I just help because you're a referral from someone I assisted. So I don't mind assisting if you come through referral.
Yeah.
Okay.
Listen, there are people always looking for good tutors, so I'm happy to pass on the good name.
All right. Well, I appreciate that, but yeah, like I said, it's quite busy. But yeah, thanks, Didi. Yeah, that's nice to know. Okay. All right. How are you doing? You still all right?
Yeah,
How many questions does this paper have?
Great.
How many do we still need to get through? Question
two
6?
more.
Questions. Okay, we're almost
Two
there.
more, and
okay.
Yeah, and they're like not such big questions. They're quite easy. So I think let's just knock it out. Half an hour.
I think we're doing quite well considering how many questions there are. This is actually quite good. We still have about half an hour, so that's perfect. Okay, awesome. All right.
Yeah, I think we can work it out.
Go for it. Nice short one. What's the focus here?
Question over here. I'm going to read the required, which is, shall I read the required first or the question?
Of course. Okay, I was impressed. You got the exam technique right. That's always the right approach. Okay, look at what they're giving you first, even if it's a short question. This is a short question, so reading the required first is going to help. Just to give you context, there's not a lot of info. Here, there was a lot. So reading this helped us because then we know what to look for here. Does that make sense? It just 100%. Gives you scope so you know what to look for when you're actually doing the question.
You don't get confused with all the other extra figures.
And remember, do you remember what you told me when we spoke on the phone?
That I told you a few things. Which part was it?
How many marks did you leave out because you didn't finish the paper?
Yeah, 30%.
Okay.
30 marks.
Okay, so to help you save time in your exam, you've got to try almost like optimize your approach, because you could read first, then look at the required, but then you're going to have to come back and read again. You rather read the required, then go back, and then you know what you're looking for.
Absolutely. It's hard time of reading questions. I agree with you. Because
in an exam, you're under time pressure. Now we don't have as much time pressure. We can go through it a bit slower, but in the exam, because you're under exam conditions, you do feel the pressure a little bit more.
100%.
But just be careful with that.
Extra time.
Okay, that's good. If you've got extra time, that's even better.
Yeah, they gave me 50 minutes an hour, so I actually got about 45 minutes extra. So
well done. That's really good. So then, you don't have to rush then, but you do need to follow good exam technique.
Yeah, I'm definitely going to do this. This has helped me brilliantly. It also just kind of preps me for the question. I know what I'm doing. Let's do it. Let's hit it.
Good. I can hear the confidence. It's amazing. So keep it up. So you were right. Read the required first and then go back. Okay. So what does it say?
So if the maximum profit can be achieved at 17,500 kilogram level, calculate the price at that level. So they obviously want us to know what the best price to sell a product at is. Yeah,
so remember, just in terms of context, if we talk about financial management, this is a capacity constraint type scenario, because remember, every business is going to be limited to a certain level of production based on their capex, based on their infrastructure, based on their resources, etc., etc. So companies are going to want to have to look at that and see, well, okay, what can we potentially make, right, if we can only produce, it's almost like a cap. I mean, if you're running a factory and you're making, what are they making? Chemicals, right? Chemicals sells a single product, fast seal, right? There's going to be a certain limit in terms of your production. Does that make sense?
Right.
So if you're running a factory and you're making these fast seal chemical products, obviously at some point you're going to have to look at expansion. You're going to maybe want to buy another building and purchase another factory or expand the current building, whatever you have to do to grow, because you're going to eventually reach this maximum. Your output can only be sustained at a certain level of production. So this question is production related, but it's talking to capacity. It might also relate to something like break-even point. So in financial management, you often do a break-even calculation where you look at break-even points, because that can also help you in terms of your production.
Right, 100%. Meaning that, like, if you can't produce enough to be able to even cover the costs of what you're producing, then it's not even the product you want to be producing.
Exactly. Yeah. So
you're
not gonna operate a factory that's gonna run at a loss. Because imagine you can't meet your break-even point, so you can't produce enough chemicals to actually cover your cost, and why are you going to even operate?
Right, 100%.
Yeah. So these workings are generally done because of capacity, because of production or manufacturing. Okay, and that's why it's part of financial management. It's purely a numbers game. Okay, can I produce sufficient amount of output to cover all of the input, basically, in simple terms?
Cool.
Right. Okay, so now that you've got the context, which is good, now what do you have here?
We have chemicals. Chemicals Ltd is selling a product, sells a single product called Fossil. The product has a selling price of 1,200 Rand per kilogram at a level of 20,000 kilograms. Meaning that, what does it mean at a level of?
Meaning at that level of production. So in other words, okay, so remember, based on supply and demand, if you're going to be producing a certain amount of outputs, that can also determine the price. Because remember, you don't want to produce so much that you can't sell. That's also a problem. Yeah, you've got to have that like sweet spot where you're producing just enough, because it's like, have you heard of OPEC? The oil petroleum cartel. What do?
Oh, I could have, yes.
OPEC. They basically manage their output, right? Sometimes they cut their production. Why? Because they want to keep the oil price at a certain level. And then obviously, like, we had problems with Russia and the war and stuff with the Ukraine and everything, and all of that stuff, then that affects global oil prices. Yeah, so this is a very, very basic question looking at the selling price. So if I can produce 20,000 kilograms of this fossil product, the selling price at that level of production or output is 1,200, yes. Because the market's not going to buy it for more than that. Then I'm going to be sitting with leftover stock.
Stock and stuff, right.
Yeah. Okay, so, besides that, let's carry on.
For every 50 Rand that the price goes up,
yes,
per kilogram, then the demand, meaning the level, will drop by 50 kilograms.
Okay, do you see what's happening here?
Yeah.
What's happening here? Explain the second part.
If the 1,200 Rand, the selling price went up to 1,250 Rand per kilogram,
yes,
then the level would go down to 19,500.
Basically, not the level, but the demand for the product.
For the demand, yeah.
So in other words, I'm not going to be able to sell more of this if I increase the price.
Right. 100%.
Okay.
That's what the demand is. And I could basically do the calculation until minus 500, minus 500, minus 500 until I get to a zero amount, in theory. That would be a lot of manual work.
Yeah, you could. Okay, you could do that. But remember, they're giving you these amounts, so you can just use the main amount and you can just work it out based on what you've got.
Right.
Remember, you need to look at now and you need to look at later. Does that make sense?
Yes, 100%.
Because you're looking at the current situation and a what if. So this is a scenario analysis.
So and the what if is that the maximum profit can be achieved at a 17,500 kilogram level. They want us to know what the best selling price is.
Exactly. There you go. Can you understand? See, like, do you understand the whole thing now?
Yeah, it makes so much sense.
Okay, you need to practice that in the exam. You have to fully grasp what's actually happening before you do any working.
Right. Yeah, because otherwise you're just working blindly.
Exactly. Okay. There's no point like doing lots of number crunching or writing down lots of things if you don't even know like where you're trying or what you're trying to achieve. So scenario, okay, so you read the scenario, you understood the scenario, now we need to do working. They said if the maximum profit can be achieved at that level, calculate the price at that level. So obviously currently, now there is a current price that we have.
1,200.
Exactly. And now we need to consider what is going to happen if it changes. This is what we don't know. Does that make sense?
Exactly.
And that's going to be at
17,500.
17,500. Exactly. All right, Josh. So there's probably lots of different ways of doing this mathematically. All you've got to do is now look at what you currently have and see, okay, if I increase my price, this demand is going to drop. Make sense?
Yes.
Okay, so how do I get from 20,000 to 17,500?
Minus, you calculate how many times 500 gets minus off that to get to 17,500.
So how many times is that?
I'm just doing the calculation.
It's 3 times, isn't it? 1,005? No, it's more. 5 times. 5. 5 times 5 is 2,500. Is that right?
Yeah, but isn't it 3,500?
No.
No, it's 2,500. You're right. Sorry.
Yeah. Okay.
2,500.
Yes.
So that's 2,500 divided by 500.
Yeah. Okay. So that's after we've changed it. Do you
5
agree?
times. Yeah. I mean, it's 5 times.
Right. So let's see the profit again. Okay. So currently now, if we sell things as is now, what's going to happen? How much income are we going to make?
1,200 times 20,000.
Okay. That's the income, right? Okay. What is the cost here? That was the selling price? Did they give you a cost?
No cost.
There's no cost. That's strange. Let's see. For every maximum profit can be achieved at a 17,500 level, calculate the price. Okay, so they want the price based on this amount. Okay, but there's no costs here. Okay, that's interesting. All right, so this is the current income. Expenses here are technically 0. And then the profit would be the 24 million, okay? Assuming no expenses. That's strange. Normally there would have been a cost here, but I don't see any cost here.
When you see maximum profit, a selling price would be.
Sorry, say again?
I think they just want to know what the selling price. I would actually do this very manually.
Yeah, it's fine. You could do it like that. You could say, let me show you. You could say,
I'm sure there's a way to do it not manually.
Yeah, I'll do it just now. Let's just show it like this. Okay. And then you could say
that 1,200
minus 500.
Exactly. And the other one's plus 50.
Okay, and then you would just do that, right?
Exactly.
And then you would get.
Let's see, 145.
Yeah. And I'm not saying that's right or wrong. You probably could do it that way. Is this correct though? Let's check. Yeah, it is correct. Wow. All right. Okay, so yeah, you could have done it that way. You could have worked it out mathematically as well. So I would have looked at this and I would have said 2,500 is the difference. Okay, which is 5 times 500. Do you agree?
Yes.
So if the actual output decreases by 5 times, the price would have increased by 5 times. Do you agree?
Yeah, you said 5 times 50.
Exactly. Yeah. So I would have said this plus 5 times 50. That's what I would have done. Same answer. So yeah, you're spoiled for choice here. You can decide which way you want to do it.
I'm sure your mathematical way is probably the way they want it to be done.
Not because, actually. Look at their answer. Their answer is very different.
How do they do it?
They have a price change here. They've got 40 times. The price change is 40 times. Okay, it looks like they're using the total price. In other words, the rand value. That's what they're using. They're using this rand value, which is the 20,000 units times this, which is the 24 million. And then the price change. See that? Okay, 20,000 units times 50 rand, which is a million. Do you see that? So they've just made the numbers very big. 24 million, 1 million. I stopped here because there was no expense, so didn't need that. Okay, you did it this way, same answer. I did it this way, same answer. Yeah, you've got 3 options
once
here.
Once they got to 24 million and a million, what do they do?
Then they use this, a fraction. Okay, remember it's 50, which is the price, and then the 500 is the change in the actual demand. So here you've got it's that whole change in price. It's almost like elasticity.
Oh, that's what that looks like.
Change in price over change in quantity. Do you see that?
Yeah, exactly.
Change in price
giving us a PED,
over change in quantity.
Giving us a PED of negative 0.1, and then they did like a price elasticity of P equals A plus BX.
Yeah. Okay.
Very,
very, very long method to get something so simple.
Yeah.
Yeah. I like your intuition. Your intuition is good. If you did it that way, you would have got it. You just would have done it a few times. Yeah.
Exactly. Okay, cool. Thank you.
Okay. I really don't know how they would mark this. If I did it this way and you did it this way and the marker was looking for this, would we have all gotten full marks? Personally, I think we should, but I don't know. The IMM, they would know. Yeah. Sometimes these places can be a little bit sticky when it comes to workings. Let me ask you a question. In your study guide, do they work it out this way?
They actually worked it out your way.
Really?
Yeah.
This way? In the study guide?
Now. Yeah.
Because my tip would be follow the study guide. If the study guide does it this way, then maybe just follow the method that they've given you, because they might be testing a method rather than testing whether you can calculate it using an answer or getting an answer. Because you could have got the answer using 2, 3 different ways, and it's still correct. You answered the question. But the problem is they might be testing a method. They didn't say use a specific method. That's the only problem.
Exactly.
Yeah.
Yeah.
But like I said, you never know. Sometimes they're a little bit strict.
I'm looking now. It looks like they did it your way.
Okay. Yeah. So I'm sure either way would be fine then. Yeah. If the study guide has this way and the question paper's got this, then I'm sure they would accept it either or. Yeah. I don't think they would penalize you too heavily for this. How many marks was this? 7 marks? Yeah.
Yeah, 7 marks.
Yeah, it's a lot just for one working. So simple. Yeah. Okay. Happy with that one?
So all of it's out there.
Okay.
Yeah, very happy.
PD, you said you're comfortable with. You're just using the formula. Are you happy with this?
Yes.
Okay. So then we reach the last question, eh?
Yeah, one second. Go up 1 second. Sorry, I said yes too quickly. Oh, PD is a percentage change in quantity demanded minus percentage change in price.
Price elasticity of demand, yeah. Let me
So
just
all we
ask
did
you
was the
again. Are you
PD.
happy with this?
Yes.
Where was that?
That's fine.
Where was that paste? There's it. This one. See?
Yeah,
Change in the quantity demanded
change in quantity demanded
divided by the change in the price.
Cool.
Okay.
Makes sense. And they had the PED already, so they just plugged it in.
They used question B actually. Yeah, it's working out the change in price over the change in quantity demanded. So change in quantity demanded, what is the change in quantity demanded? Minus 500, do you agree?
Yeah.
So what is 19,500 minus 20,000?
Minus 500.
Minus 500.
Minus 500.
Minus 500 over the change in price. What is the change in price? The change in price was 50.
Yeah, 120,000.
Yeah, this is not right.
200.
That's not right. This is, the change. Sorry, that's correct. It's the change. So change in quantity demand. Let me write it down actually. I don't know if you're following. Let me rather write it down. It's easier. Okay, then I can explain it. Change in quantity demanded. Change in price. Okay, so change in quantity demanded. Let's go back to the top. Okay, what was the quantity demanded? It was 20,000, and then it is decreasing by 5. Do you agree?
Yes.
So 19,500. Does that make sense?
Yes. Why did you divide by 20,000 again?
Because it's a change in price. It's a percentage. Percentage change. See the
so
equation.
19,000.
Look at the equation. Percentage change in price.
But did we do that for the previous question as well?
What previous question?
It was question 3.
It's a percentage change. No, here they gave it to you. You didn't have to work it out. Different question.
Oh, fine.
Okay.
So it's a percentage change. So you do 1950 minus 20,000 divided by the original amount 20,000, and that number all over.
Yeah, that's the percentage change. Change in price. So let's do change in price. What would change in price be? Change in price would be. The price
before was 1,200.
No.
Sorry.
1250 minus 1,200.
Yeah, exactly.
It's going up, not so?
1,200.
It's going up, not so? Do you agree?
Yes, exactly. Agreed. Going up by 50 rand. And then then you do negative 2.5 over 0,041.
Yes.
Or 2.5 over 4,17.
This divided by that. So PED is going to be this divided by that. There's it.
Cool.
There. Positive or negative? Okay, there's a typo here. This should have been negative, eh?
Yeah.
Negative over a positive is a negative.
Okay, cool.
Okay, it's just a minus missing. The minus is right. It's just a minus. Minus over a positive.
Yeah.
Okay.
Cool.
Right.
I'm happy with that.
Okay, good. Okay, last question. Question 7, Q7. Okay, read it while I just put a heading.
So the required is using the linear regression analysis. We must calculate how many customers will be expected to visit the website if an amount of 100,000 Rand was spent on marketing the product. They want to know, it's really customer turnaround, or trying to think of a better way of saying it, customer acquisition, really.
Okay, you're thinking about the context, that's good, but if we're talking about the actual application, when you see the word linear regression, what is that?
No, I'm not sure.
Okay, so linear regression, when you have statistics, sometimes you're trying to find a formula that communicates a certain trend based on data points. So remember, like in marketing, you can't ask everybody to fill out a survey, right? You're going to have to sample a population and then get certain people to fill out a survey, right? Does that make sense?
Yeah, 100%.
Okay, so when you're looking at statistics, there's something called linear regression. I just want to open up some slides that I have just to show you an example of it. Where's linear regression?
There you go.
Linear, no, this is linear equations. I'm looking for the stats. Non-linear. Maybe this is a different course. Let me think. Which module did linear equation? Oh, statistics. That's it. It's not that one. It's stats. STA. Okay. But yeah, in statistics, have you done stats in any of your modules?
A little bit.
A little bit.
Touched on. Yeah, touched on.
Okay. Oops. That's long ago. Sure. Let's find. Just thinking now, where did I do linear regression? I think DSC 1630. Let's try 1630. Okay, but anyway, when you're looking at linear regression, you've got this values that depicts a line, and that line is going to show you an estimate for, it's almost like a prediction. It's like predicting when something is going to happen. Have you never done it before?
No, I know. I mean, I know how to use the formula.
Can you work out the A and the B in your calculator?
Generally, you don't even have to. They'll give it to you. Most of the questions.
So in your module, you don't have to calculate the A and the B at all.
You might have to, but then they'd give you Y and X.
Okay, that's interesting, because normally you might have to calculate it, actually. Did you have to calculate anything here? No, you had to use the equation. Okay. Have you never had to calculate this in your module?
I don't think so.
You don't think so?
No, I don't think so.
Okay, so it should be okay then, right? I want to find that nice page that I can show you.
That's cool. I'm just looking in the meantime here, like through my.
Just check your study guide quickly and just confirm if it is something that you need to calculate or not, because it's not a very difficult thing to do on your calculator, but you do need to know the context.
Yeah, I don't think I've ever actually used my calculator to calculate A and B. The only thing I've ever used my calculator for in this course is for NPV and for that other calculation, also using CFJ. Just
those two, hey?
Yeah.
Okay.
Because generally the way that they say it is that A is basically the. I need to have the notes right now. Give me a second. I've got them in front of me. The way they generally put it across is that basically like A is the amount of customers without marketing.
Yeah.
And I'm just putting up exactly what I've said. That page. Yeah, that A is the sales we make with no advertising, meaning our base sales. B is the coefficient, meaning the proportion that is converted to sales, and X is the marketing expenditure. And then they'll say, like, if they want to turn around X amount of customers, what's their marketing? Or if they want to do they'll like take away, they'll say like how many customers would they make without any, what's the number of customers without anyone visiting the page, with no marketing, etc., etc.
Okay. Yeah, it's definitely a stats thing that you can do, where A is your constant, your y-intercept. So do you remember the maths from like school days? So mx plus c.
Yeah, exactly.
Okay, so the b is the gradient and the c is the y-intercept. Do you see that? Yeah, but they call this linear regression because it's statistics. You can calculate it. That's why I'm asking you, do you need to calculate it?
I don't think so.
Okay. If you don't need to, then you don't have to worry too much. But it can be calculated on a normal scientific calculator. It's not a difficult calculation at all. You just need a table of values. Okay. All right. But we'll look at more past papers and we'll have a look. Maybe look at some of the others as well. But we will look at another one tomorrow. Let's just finish this one quick so we can wrap up this past paper. Okay, so the marketing manager here asked you to determine the relationship between the amount of spending on marketing in relation to what's expected number of customers visiting the company's website in order to purchase the online gaming program. Okay, so when you've got X, X is an independent variable. Y is a dependent variable. Do you agree?
Yes.
Okay, so obviously if you're spending money on marketing, that's going to affect the number of customers visiting this website. Does it make sense?
Agreed.
Okay, so you need to write this using the amounts given in the question. So 104 and 0.014. Okay, and then X is the amount of spend that you're going to be inserting. So calculate how many customers will be expecting to visit the website if 100,000 is spent. So all you have to do is
X.
Yes. X. Does it make sense?
Yeah, that's easy enough.
And then just solve for Y. And Y would be the expected sales, basically. Happy with that? It's not adding. Ooh, maybe multiply. There we go. That's better. Okay, there's Y. And then calculate the amount that you would have to spend on marketing in order to attract customers. So obviously here, again, same formula. But now, what variable are they giving me? X or Y?
3,000. They give me Y.
Good. And then you would just solve. Does it make sense?
100%. So you'd move the 104 over, you then divide by 0.014, and then you get X.
%. Is your maths right, eh? Is your maths right, eh?
Yeah.
You can do the arithmetic, the algebra.
That's simple.
Okay, same answer. 26857.14, perfect. All right, and then
That's fine.
here, okay, here they're assuming an increase. So you're making the X bigger, right? And then obviously A next 2 years and A, okay, I don't know what that is. A of, I think that's
they meant to
A.
say and a B of.
AB. I don't think it's AB. I think it's just for the, is it B then? Oh, and
Yeah,
B of. Oh, I see.
yeah, exactly. I think they were supposed to say and no, they were supposed to say and a B.
A B, yeah. So this B is changing. Do you agree?
Yeah, went up 10%.
Yeah. So it went to 1.13. There's the B. See?
Exactly.
Yeah. Okay. And then they're working out the Y using the new B. Does it make sense?
Yeah, makes
Yeah,
sense.
yeah. So they're just changing the variable, but it's using this formula. Is that all right?
Yeah, exactly. Makes sense.
Okay.
I'm just plugging in when it's said.
Correct. Yeah. And then that looks the rest. What would the cost of attracting one customer in the third year be of the forecast? Okay. So then obviously the third year. There's the third year. Okay. They've calculated as 0.09 because it is increasing by 10%.
Right.
Increase in marketing. So the marketing is increasing and the B is decreasing. Do you see that? The B decreased. So in year one, it was 13 or 0.013, then it was 0.01, and then it was 0.009. Do you see that?
100%, that makes sense.
They're just asking you what the actual impact is going to be. Okay.
So then they say, what would the cost of attracting one new customer in the third year be? So what have they done? 1 divided by 0.019.
Okay, remember it's the cost of attracting one customer. So remember X is the value of what? X is the value of?
The amount of marketing.
The amount of marketing. Yeah, that's the amount of marketing.
Y1?
Say again?
Would you not just make Y1 and then solve algebraically?
What would the cost of attracting one customer in year 3 be? You possibly could. Let's check. Okay, so you're saying, what was my A value? My A value was?
0.
Yes. The B value was 0.001.
Second.
And you wanted one customer?
Because that's second year. No, we're doing third year. Sorry.
Yeah, that's right.
0.009.
No, it's correct.
Oh yeah, you got it.
It's correct.
Oh, sorry, I thought you said 0.01. Sorry,
no, it's correct, yeah. Then it's 1 divided by 0.009, which is what they have, yeah.
Oh, okay, fine.
1 divided by 0.009. Yeah, that's right.
Okay, cool.
Yeah, so yeah, you can use the equation. They just use the variable as the number that they're considering because it's going to be affecting the dependent variable will affect the independent variable will affect the dependent variable.
Okay, fine, that makes sense.
And that's it. All right.
Cool. Thank you.